Hey traders, Nick Shaheen here, recapping the day. This is November 5th, 2014. Kind of a confusing day. We had pre-open up markets on the backs of an up market all across the board in Europe. The Asian markets overnight were mixed. So we expected a lot out of the day, and we got it. We got all-time highs. We have all-time highs in the SPX and the ES. No one can argue with that. What I can argue with is that first the scoreboard, obviously. The Dow was up 100 points, but I think 60 or 70 of those is Visa all by itself. Again, Visa and MasterCard up almost 2.5% if you wash them both together. And the SPX closed up 0.57%. The Nasdaq closed flat to slightly red, so let's call it flat. The small caps were just up, but they were red the middle part of the day. Mid caps also not as happy, up 0.4% though. So kind of a mixed feeling. Yes, it was green all across the board, but it wasn't as bullish, even though we were all-time highs. But anyway, all of this won't matter. Tomorrow morning, before we open, the ECB is going to be meeting and probably making a press conference 5:30 Pacific or 8:30 Eastern Standard Time. So when they will say it exactly, I don't know. What they will say, I don't know. Nobody knows. The feeling is that they want to do a QE, as in Draghi, but they can't do a QE because of the opposition. Now the surprise, it seems that I think that we may have priced in a little bit of upside there, so nothing will cause some sell-offs. Not a disaster, I don't think, because not everybody's expecting. However, the risk is to the upside if they do announce a QE of some sort, something concrete. We may rally. We will rally. How far up, I'm not sure. So we had a lot of uncertainty built in through tomorrow. The VIX, however, does not reflect that. It was down almost 5%. For a while, it was hanging on to minus 1% or so, but then it turned around. Okay, what about bonds and the 10-year rates? The 10-year rates were up a little bit, and the bonds were down a little bit, however, up from the lows of the day. So what happened today? Intraday, the upper left-hand corner right here is the S&P. So we came into, at the open 2020, we had the high, and we almost matched it at the end of the day. So let's call it a strong close. Something in between was kind of bearish. We sold hard really quickly, but then we recovered, and then right around here we sold really hard, and I couldn't find a corresponding headline for that. It was a deep valley. We got out of it, and then we closed positively. After hours, we have some movers and shakers. Qualcomm will put pressure downside, I believe, to let's see here, let's put a QCOM, I think, ticker. I don't track it. Yep. So Qualcomm is going to be down, I'm calling this, 5% maybe, and it is a big box in the indices. This is the S&P 100. Where is it? Qualcomm is right here. So this box will be minus 5%, and it's a decent sized box, so it'll put downside pressure. In the Nasdaq, it has a bigger box. Qualcomm is right here, so it will put downside pressure. Apple kind of played flat today. Google was down a little bit. Some people talking about whatever death crosses, blah blah blah. Mondelez was up huge today, 6%. That's a decent sized box. So this can tell you where the strength and weaknesses came from in the Nasdaq. Obviously weakness in Gilead, but we had offsetting greens here and there. So this is the Nasdaq. This is the Russell. Healthcare was down, and yet energy is up. Why is energy up? Let me switch you back. If we replace this with whatever I usually have there, it's oil. Oil was up 2% today. However, it did have a scare. Let me zoom out to a few more days. Yesterday, put in a very low low, and overnight it bounced back, and then in the morning we had this spike right here. This is based on some sort of a fire that happened in Saudi Arabia, one of the refineries or production sites. but then it immediately gave it up. This is a longer term, so this is a big whoosh of oil. Now we're back, but still below the $80 downtrend from a while back. And let's go zoom out a little more so you can see where oil came from. That triangle here, not good, and now we're trying to recover it. So the question is, what will it do here? Will it confirm the fact that oil is going to be down from now on? We need to get used to lower oil and turn around and use this as resistance. I'm not too convinced with that yet. So we'll see. The next couple of bucks in oil are pretty important. Down here is the NASDAQ. NASDAQ was kind of contained. Yes, it was exuberant in the morning, but then it quickly let it go, and then it rallied just like the S&P did, and then it quickly gave it up on something weird, and I don't know, and it bounced back, but it stayed contained, flat. Small caps were even more contained at one point. You know, they rallied immediately after the open. They let go all the overnight pre-open, and then they chopped, and then they broke the chop, and then they settled down, and they closed okay, but close to the low than the high. And we'll look at the candles to tell us. Apple, big swings to start the day, and then other than that strange dip in the middle of the day, which I still don't know what it is, it corresponds with everything else. Settled down somewhere in the middle. Google had a tough day, but still hanging in there. Minus 1.5%. If I have long positions, I would buy some debit put spreads to protect them, but nothing too immediate. I want to go long it, but I'll wait until sentiment abates, the negative sentiment abates. Now, if the markets sell off in general, they will punish Google. If markets don't sell off, Google will be just fine. All right, so let's go into individual candles. This is LinkedIn, obviously a bad day. I didn't want to look at LinkedIn right now, but it's in the middle of a gap. So do they want to fill it all the way down to 205? I'm not sure. I'm not long it, and thank goodness for that. Here is the SPY. The SPY candle is a bullish candle because, why? Because they tried to sell it off, but then they rejected it and they closed towards the high. That's pretty bullish. As far as trends are concerned, obviously we're on the upper end of the trend because we're at all-time highs, and this is an incredible feat. I'm not going to diminish it. It's a little better volume than yesterday, so it's not like it's on no volume. Still low volume. The Nasdaq's candle, kind of, they didn't close. It wasn't too bad. It's still we're still at, these are not all-time highs by any means. I showed you that yesterday, but it's still at recent highs, year highs, that's for sure. 2-year highs, if I go to 2 years. And if I go to 5 years, still. If I go to 10 years, probably not. I mean, still, but if I go to 20 years like I showed you yesterday, the dot-com bubble definitely is higher, right? But we're still way up there. We are way up there. All right, so what about the small caps? I'll go to IWM. Not all-time highs, not year highs, which are the all-time highs right here. So we're still lower than 120 on the IWM, and we're kind of like at a lid, right? It didn't even match the last highs we've had in the last 3 days of last week, the bullish days. That was 1031. And anyway, so we didn't even poke those. And so I'm a little concerned because I like to listen to the small caps. It's a basket of 2,000 stocks. Tomorrow is important. The candle is not hideously ugly. Volume is okay. Same with the NASDAQ. So what about Apple? Apple still at highs, still in facing resistance territory at 109. It did poke it a few days ago, but it reverted. So Apple is playing along the lines of our levels. Even the SPX, it's below our 2025 resistance level for this week, where resistance starts. It's not set in stone. Tomorrow, everything is out the window. It's all about the ECB in the morning, and obviously the jobs number. But for the jobs number to really move us, it would have to skew drastically away from expectations. It would have to be really far away from expectations for it to actually move us up or down. We saw a peak of it with the ADP numbers, and the markets didn't get spooked either way. So if the jobs number is less of an impact unless it's really weird. And the ECB is, I think, the thing that I would be looking at. So we should come into tomorrow with some positive bias given the scoreboard being green, but it's ridiculous for me to even say it because it doesn't matter. Early in the morning, I think they start meeting at 4:30 my time, and then they have the statement starting at 5:30 my time. My time is being Pacific, so whatever we think tonight won't matter. It's whatever it is tomorrow morning, and then we'll say it is what it is. So, having said that, there are some names I'd like to look at, but I think I'll break it up into a separate video. Today I made a few notes. Crude, for example, lower oil will hit companies lower. I used an example because I wrote it up in the 90s when crude was in the 30s and then suddenly jumped up to 60 and 70. The money went straight to the bottom line, straight to the pockets of the companies. Here's Suncor. Obviously had head and shoulder-ish pattern right here. It satisfied it in the recent drop. Well, yes, it looks like it's at towards the low and somebody would want to take a shot at it. But, remember earlier I said that this is 2 years. It shows you that there might be even lower prices, which was there, 2 years ago. God, trigger happy. But the reason I show you this is because earlier, just a few minutes ago, I said we may be playing in a different level now with crude. If that's the case, there are a lot of people, smart people, saying crude is going to be lower for a while. If that's the case, the pockets of these companies is going to be hit for a while. Yes, they'll be profitable anywhere above $55, $60, but they'll be a lot less profitable than last year. So all the numbers, all the estimates, if they haven't been revised or repriced, they're going to be different. So my statement here is don't catch these falling knives. There are easier ways of making money, and if you do want to catch a falling knife like that, why not do it via a debit call spread? Okay, so that's all I'm saying. And having it failed after this bounce down to here, if this continues on down and revisits down to 31, 32, much lower prices can be in store for this particular stock. Now, I don't know about the other ones. I don't track them anymore because it's a rigged market. Same deal. If it reverts down to the 90s, there might be a lot lower prices. And this is Exxon. And this is like a big guy, right? You've heard of it. And this is a 2-year. So this is where they were playing last year. And why is it that they won't go back to play here again? I don't know. They could. There's a rising wedge that broke right here during the test, and we recovered all the way up to here. So now is this area a resistance level? If I were to guess right now, I'd say, you know what, the downside is a good chance of more downside here. But I'm not playing it because it's a rigged market. Oil is a rigged market. I did have a question about the weeklies. Somebody asked me, is there an advantage to doing weeklies over monthly options? The question really is it an advantage to play this week's versus longer time frame? I said, you know, there are pluses and minuses for both. The plus for this week is that, boom, I know I win, I collect my money quickly. The bad thing is that because it's quickly, if something goes wrong, I leave myself few outs. And if something goes really wrong, there's no way of fixing it. Whereas if I have a position 2-3 weeks out and something goes wrong, I have time to react, and I do have other places I can move the trade to or defend it somehow. That's pluses and minuses. I wanted to address that. Now, another note about Republicans winning last night. Them doing that reduces the chances of some drama around the holidays. Every year in the last few years we've had drama. Most notably is the one where the United States credit got downgraded because 17 people wanted to make a statement, and then boom, next thing we know, over hours we got downgraded and we took a hit. I remember it cost me money. I was long, and that wasn't good. So this is one thing. And then also someone wanted to go long the Google. And I said, well, you can go long it if your portfolio is short. $485 spread in December is pretty decent. It paid about 25 to 30 cents. If you're really aggressive because we have a lot of shorts, you can go to 500 level, and that pays about 40 cents or so. Get educated on that. That's about an 8% price buffer and a theoretical chance of success about 90%. But tomorrow might be smarter with a little more information on how to do it as far as what we're going to do with the ECB thing. Alright, so somebody also asked me about rolling up. I sent a note about that, so hopefully you read it. And then they've had a follow-up question. Can you explain it really? And then it's also more to the point on the play with Alibaba. They wanted a little more detail of how I turn a call spread, a naked call that I bought that was a winner. How can I turn it by selling a call higher into kind of like locking in some profit? I will cover that in a separate write-up. So again, Green Day. Everybody has something to celebrate today, but you cannot deny that we are at all-time highs with the SPX or S&P, and I believe the Dow. That's almost. Let me see, DIA. Yep, this is pretty high, and that is a bullish Dow. But again, Visa is all in it, so I don't want to trade based on one stock. Speaking of one stock, Tesla aftermarket. Let's put it in here for a second. TSLA. Initial reaction. Let me show you the minute because it's more impressive. Down to 217, the initial reaction, up to 249 immediately thereafter, and then and now it's still 244. What are they buying? I'm not sure. It did not sound positive to me. So it might be shorts covering or whatever it is. I don't know where it's going to open tomorrow. Right now it's showing about a $14 higher than it closed at 231. I would have guessed negative. Long term, I think it's just a car company, and eventually they're going to price it as a car company, and it's not going to be a happy place for longs. I'm not short it. I'm not long it. I didn't play it via Lotto because all of my Lotto guesses this week have been wrong-ish. So I got sick and tired of it. And I was going to guess puts, so I would have been wrong. I told you, whatever I guess, you take the opposite this week on the Lottos. Anyway, Nick Shaheen signing off. Thanks. I'll catch you up before the open tomorrow.